Well, hello and welcome today to Getting Started with Technical Analysis, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I am not, in fact, Barb Armstrong, so some of you may have been expecting Barb to be here. Unfortunately, she's feeling a little under the weather today, so I'm stepping in to take this webcast. So, I'm here. I am joined out there in the chat by my good friend Connie Hill, 20-plus year veteran of the financial markets. She's there to help facilitate the conversation. And welcome to all of you, whether this is your first time attending, and I know we have a number of you who are here for the very first time. We've been having a very lively chat already as we've been getting started here today. And welcome to those of you that have been here on a regular basis. And if you're watching us in the recorded version, we're glad to have you here with us as well. Be a part of the conversation. Chat in your comments, your questions along the way. Connie will help to facilitate those. I will be looking for those questions and comments along the way as well. If you're watching in the recorded version, leave us a comment in the comment section. And I will say this. It's a high likelihood that there's going to be a feedback survey out there in the chat today. Look for that feedback survey. Let us know what you think so that we can make these sessions better for you. That's how you can help us out with this particular webcast. So I want to talk about a couple of things about technical analysis today, but my primary focus is going to be understanding when a stock is making new higher highs and higher lows, or new lower highs and lower lows. And we're going to use some of the technical analysis tools that are out there and some of those that are available on the Thinkorswim desktop software platform. So that is going to be a good starting point. I'll talk a little bit about where this class fits in the context of our Getting Started with Technical Analysis playlist in just a moment. But a couple of quick housekeeping items. Remember that everything that we talk about simply for illustrative and educational purposes only. It is not any kind of a recommendation or endorsement or advice. Remember that investing involves risk, including the loss of principal. There are lots of different ways to look at the market. Technical analysis is only one of them. Technical analysis is theoretical to do, and therefore, whoops, let's see if we've got audio. Oh, hang on, stand by. Okay, good. Looks like we're back. Looks like our audio is back and running. So remember that looks like we're all the way back. Schwab doesn't recommend the use of technical analysis as sole means of investment research. Past performance, no guarantee of future results. We're going to be using the Thinkorswim desktop software platform, which is a great learning environment. It is not, however, a guarantee of future success out there in the real world. Be aware of that as you move your practice from paper trading to live trading. Also, when we talk about stop orders in this discussion, using a stop order as a means to exit a position if it's starting to go against the direction that we want it to go. Stop orders do not guarantee an execution price. They simply allow us to specify an activation price. And in the event of a stop limit order, there is the potential that we could have that order gapped around and the order could not fill at all. If we do happen to talk about options, remember that options carry a high level of risk. They're not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options before considering any option strategy. Now, here's the discussion that I wanted to have really quickly. This particular webcast, for those of you that are brand new or that are just joining us today for maybe you got an email directing you to come and watch this particular webcast. This webcast is part of a series called our Getting Started with Technical Analysis series. It is a 9-lesson rotation. And then along the way, we will sometimes throw in bonus sessions. This is going to be one of those bonus sessions. Barb Armstrong has just completed lesson 9 last week, talking about indicators and divergences. That means next week, she's going to start on lesson 1, Introduction to Technical Analysis, once again, and start in that rotation. So to avoid messing up that rotation for Barb, I'm taking this as one of those bonus sessions. We're going to talk a little bit about a concept that comes up quite often. Then that is, how do we understand or identify highs and lows in price movement? One of the things that, one of the questions that I get very frequently when I'm on the road teaching our live events, which is what I do primarily, is how do I know if a stock is making a high or a low? How do I identify trend based on highs and lows? And how do I know where levels of support and resistance are? So we're going to talk about that in this discussion. 3 events that we've got coming up. One, in Miami in December, we're going to be talking about advanced options, December 19th and 20th. You're welcome to join us for that if you're an options trader. Benefits, it would be beneficial if you already have some option knowledge coming to that advanced options workshop. But Dallas and Seattle, Washington, Bellevue, those 2 events are going to be our technical analysis and option strategies workshops, where we start from basically that session 1, introduction to technical analysis, and we take it all the way through the discussion of using technical indicators, looking for entry and exit signals, and understanding how technical analysis can also work into helping us to take advantage of things like option strategies. So that's going to be Dallas and Bellevue. Those are our next most recent coming up live workshops. These are no cost to you. We would love to have you with us. These are typically over 2 days period of time. So you can check those out at schwab.com/events. We would love to have you with us for those events. All right, let's do this. Let's pop out over here to the Thinkorswim desktop software platform. And let's talk a little bit about this idea of highs and lows and the progression of price movement. So I'm going to go to my chart here. And the chart that I'm going to look at is this one, SPX. This is the S&P 500. And I just want to kind of use this as our basis and our basic indicator for what's going on. We're going to just use this as an identification of highs and lows, trend movement. So what I'm going to do is I'm going to grab my magic marker here really quickly, and I'm just going to start marking some lows along the way and helping us to identify trend, because an uptrend is made up of higher highs and higher lows. So each one of these lows that I've marked along that line in those green little dashes, those are new higher lows. And the corresponding higher highs that go with those might look something like this, where the stock is making, or the index is making, a new higher high as it continues to move up. And as we start to see that progressing, that's where we get our definition of an uptrend, higher highs and higher lows. Visually, that makes sense. And I think when you present traders with a chart like this and you start to draw those lines out, it becomes fairly easy to see. Here's where it doesn't become easy to see. Number 1, in periods of transition. And number 2, when you're sitting at home alone, facing that screen on your keyboard and on your laptop or your desktop, and you say, wait a second, is this a higher high? Is it a lower high? Is it an equal high? Is it a lower low? How do I know? So we're going to talk about some tools that we can use to help us to identify. Now, what I'm also noticing that's going on right now is we've had a lower high and a lower low. So in a shorter time frame, if the market was trending higher, it's now got a shorter term downtrend that it is in. That doesn't mean that the market is reversing. It just means that the shorter term trend has turned down a little bit and hasn't really yet changed the longer term trend of the market. But now the stock, or this index, has made a roughly equal high. If it makes a new higher high, maybe breaking out of this range or breaking out of that range right there, now potentially we could resume that uptrend. On the other hand, if it breaks this low and makes an equal high and then makes another low and then another low and a lower high and a lower low, then we are now in a longer term, intermediate to longer term downtrend, but we're not there yet. But the question always comes up, and as I look at a chart like this, and as I draw those lines on there, it's easy for me because I've been looking at these charts for better than 20 years, as has Connie Hill. But as we start to look at this and think, wow, is it or isn't it? Becomes a difficult challenge to identify these types of highs and lows. And I've had some pretty significant arguments with other traders, which is fine because arguments and differences of opinion is what makes markets move. But I've had some pretty good arguments with traders recently about what constitutes a higher high and a higher low, and whether or not the market is making higher highs and higher lows. So I wanted to bring to you an idea that helps us to understand those highs and lows. It's one thing to draw those levels out or draw those highs and lows out. It's entirely another to use a technical indicator that can help us to visualize those lines. So the first thing I'm going to do to help us visualize those lines is really kind of put on here one of the most basic technical indicators that many traders may use, and that is a moving average. Now, in the context of this class, we're not going to go into the depths of discussing what is a better moving average than another, or what is a more opportune moving average than another. I'm simply going to use a simple moving average. So I'm going to put on this chart, I've already got it in place, a 200 period simple moving average. And I just did that by clicking on the little flask icon up here at the top of the page. And then I came over here to the left-hand side and I typed in the word simple, and I've got a simple moving average. And I added it over here to the added studies and strategies. I edited that to show 200 periods or 200 days, since this is a one-day chart, and I've applied it on the chart. Now I've got a 200 period moving average on this particular chart, and it is moving higher. I can objectively say that the market is in a longer term uptrend. I can see that objectively from that 200 period moving average. That I know that over a period of time, yeah, there's going to be shorter term pullbacks, but until that 200 period moving average turns down on that right hand side, this market is still in a bullish uptrend. Speaking of a bullish uptrend, we want to keep these webcasts going in a bullish uptrend. You've got a chat, a survey, a feedback survey there in the chat. I would ask that you either click on that link now and set it aside, or come back to that link and fill that survey out, so that you can provide your feedback about this particular webcast. Now, David asks a great question. Are there workshops or webcasts that talk about how to use the features and functions of the Thinkorswim platform? Absolutely, positively, yes. And I'll show you where some of those are here in just a moment. But I wanted to use a tool besides that simple moving average, because that gives me a trend direction, but it doesn't necessarily point out those highs and lows. But I wanted to use a tool that might help me to identify where those levels are. So James points out that, there's no way to predict the future. I don't know what the next day is going to be, and neither does any technical indicator, because news happens. Even things like Ichimoku clouds or anything else, something that might purport to be a leading indicator, doesn't take into account news. News can happen, and news can change the market in an instant. So because we don't know about news, we have to be able to look back and say, I want to make a decision. I want to be able to make a decision based on information that has already occurred, based on objective evidence that there's a high or that there's a low. So pointing out where those highs and lows are becomes a helpful tool. So what I'm going to do, normally we would go to the study set here and we would start to look for something that says highs and lows. And there are some tools here. There's some highs and lows, zigzag highs and lows, those studies. But I've got one that's really quickly, that is really simple. and gives us some information without a lot of fuss, if you will. But it's not located here in studies. So I'm going to cancel that. And I'm going to come over here where it says patterns, right up across the top of the chart. I'm going to click on patterns, and I'm going to click on select patterns. Now what I'm going to do is I'm going to come over here where it says available patterns, and I'm going to type in this word, Williams. Whoops, Williams. Sorry, not classic candlesticks, Williams. And I've got Williams fractal. Now, all this Williams fractal indicator does is it looks like it gives me an indication of a situation where there is a price that occurs at a high or a low relative to the prices around it. That's how we know. We're never going to know that a low is a low before it becomes a low. Whatever the price is right now, I don't know if that's a high or a low relative to what's coming next, because I can't predict what's coming next. So all we can do is we can look back at what has already occurred. So we're going to use the Williams fractal study. And so I'm just going to double click. I've got it over here on the right hand side, and we're going to edit that Williams fractal indicator. And the Williams fractal indicator is simply doing something that is simple and straightforward. Now, I'm not recommending this particular indicator. We're just talking about this. And here's what a Williams fractal does. Based on whatever we choose as our sequence count, it gives us a certain number of prices, a certain number of, in this case, candles, because we're using a candlestick chart, to determine where our highs and lows are. So if we've got a sequence count of 3, that means if we've got 1, 2, 3 candles, I'm going to look for, and this indicator is going to find the highest high within a sequence of 3 candles followed by 3 more candles. So this becomes a 7 candle pattern. If we were to change our sequence count, let me just do that really quickly. Change our sequence count to 2. Now it's 2 candles, the high of that candle, and then 2 more candles. So it's a 5 candle count. And if I change this to 1, that's a 3 candle count. So where is the most recent high in the last 3 candles or last 3 prices? That's interesting, because that tells us why we might be seeing a turning point and where that turning point might be occurring. So what I'm going to do is we're going to start with a 1 sequence count Williams fractal on the SPX. And I'm just going to click on OK and apply and OK. And I'm going to actually show that. So we're going to patterns, select patterns. I'm going to turn my eyeball on so that we can see it, apply and OK. And now the indicator is going to plot those little wedges each time there is a new low or a new high. It's going to put a green wedge when there's a new high. It's going to put a red wedge when there is a new low. So let's zoom in a little bit and see what this is giving us. You're going to say, wow, that's a lot of highs and lows. And you're absolutely right. It is, because the price of the stock or the price of this particular index has been moving. And this is going to work whether we're talking about the SPX, which is an index, whether we're talking about an individual stock like, let's take a look at WMT. WMT. It's going to work on an individual stock. It's going to work on a futures contract. It's going to work on any kind of tradable instrument that has price movement. You can use this fractal pattern. If you're going to trade futures, I'm using this simply as a demonstration, but if you're going to trade futures, remember that futures trading is highly leveraged, not suitable for all investors. It requires separate trading authorization. I teach a webcast on Tuesday mornings talking about trading futures. But let's go back to the SPX, to that index. And here's our fractal display. So here's what we know. for instance, this most recent fractal indicator is indicating a low. That means that where that price occurred, that low price for that trading day, was the lowest price in the last 3 candles. This high that just occurred there was the highest price in those last 3 candles. So when we start to see those movements happening, where we get a turning point is where it plots that indicator. Now, you might say, well, why didn't we get a turning point at any of these candles, these green candles along the way? Because we never had a new low. It never moved down from that level. It made that move continually up in this particular case. So right now on the SPX, we've just most recently in yesterday's trading had a new low. And if we compare that low, let me grab my line tool. If we compare that low to the most recent low indication, that is a new higher low. And correspondingly, if I come back and I create this new high and I compare that new high with the most recent high, that's a new higher high. So in the very short term, I know, I'm not guessing, I'm not imagining or hoping or wishing or fearing, but I'm viewing this information as objective evidence that this indicator is pointing out that the SPX is currently making higher highs or has made a higher high and a higher low. And Michael points out, this sounds like a great tool for swing trading. Swing trading being the idea of trading from a level of support or a low to a level of resistance or a high, or the other direction. And you're absolutely right. In fact, that's why this Williams fractal indicator is or was created, was to point out those swing trades. Now, I'm going to show you also how we can use it for a long-term trade, because I know some of you asked me the question, do I have to be a day trader or an intraday trader or a short-term trader to appreciate what we can do with technical analysis? And the answer is absolutely not. We can be long-term investors and utilize the lessons that are taught to us by technical analysis as well. So the SPX right now, still in a period of higher highs and higher lows. However, if we were to get a candle tomorrow that comes down and gives us a low below this low, in this particular case, that low at 67.99, then what we're going to have is we're going to have a high and a new low, and that's going to be a lower high and a lower low. And that might be an indication of trend change in the short term. But short-term trends change first, then intermediate term trends, then long-term trends. So if we're starting to see this perspective where we maybe have some sideways movement here, that could be an indication of where there might be a turn. Now, Jay Hutch says, can we chart resistance and support lines? And yeah, there are technical indicators out there that do that. They all tend to smooth those indicators out. What I find might be helpful is using these points where those highs and lows are indicated by the Williams fractal and just drawing a line at that level. If I grab my line tool from my drawing tools down here on the bottom right, and I come in here and I say, hey, there's a high indicated by the high of that candle right there. And I'm going to draw a horizontal line, and I come back in here and I draw a low based on that low that's indicated by the Williams fractal. There's my short-term levels of support and resistance. Now, there is a technical indicator called a Williams alligator that intends to do exactly this, but it tends to smooth out that information. And that's kind of an extension of what we're learning about here. But my primary focus is on using these Williams fractals as a means to define where our highs and lows are. So now we could objectively say that if price moves above this line that we've drawn, that's a breakout of resistance. And if price breaks down below that line that we've drawn, that's a breakdown through support. And we can use that as a means to take action. Levels of support and resistance, when the price of whatever instrument it is that we're looking at doesn't behave in the way that we expect it to do, that becomes actionable. A level of support, we expect price to bounce up and move higher. A level of resistance, we expect price to break down or bounce down from that level and move lower. So using that Williams fractal tool to point out those levels can be helpful. Now, that was a sequence count of 1. That was a sequence count of 1. Let's change our sequence count a little bit here. So you notice if I zoom back out, you notice where those highs and lows are pointed. And there's a lot of them because it's just one candle and a high or a low and one more candle. It doesn't require more information or more data. But if we go to that pattern selection on the top right, we go to select patterns and we come to the gear icon where we've selected our Williams fractal tool, and we go to a 2 candlestick count or a 2 sequence count. That means we have to have 2 candles and then 2 candles on the other side of our high or our low. So we're going to click on OK and apply and OK. Now this is a fractal of 2. And if you notice, because we don't have 2 candles down yet on this right-hand side, we don't yet have a level of resistance plotted here. So it's still making higher highs. It hasn't yet created the next high because our sequence count is longer. And we notice that at the same time, we haven't created a new low. So if we're using that Williams fractal, which is more of a swing, a count of 2, which is more of a swing trading perspective, we've got to take these lines of support and resistance off because we don't know yet where those highs and lows are going to be. So we don't know if we've currently got a new higher high or a new higher low. And we won't know until we get price movement above or below this range over 2 candles. So it slows down the signal a little bit. But what I can do is I can objectively say, look, back here, lower highs. Back here, lower lows. The most recent 2 fractal indicators were both lower highs and lower lows. So we're still in a downtrend, intermediate term, using that Williams fractal count of 2. Yeah. So that, and it's not in studies, it's in patterns. So that can be helpful if you are smoothing out some of that noise. Now, I'm going to go one more step beyond this. So I'm going to show you where this is. We're going to go to patterns. We're going to go select patterns. So patterns is on the top right of our chart. Select patterns. And I'm going to go to candlesticks. That's where we're going to find Williams fractal. Williams fractal over here. Now we're going to put in a sequence count of 3. Now this is a 7 candle pattern. 3 candles followed by the high or the low, then 3 candles in order to get that level. So now we're going to click on OK and apply and OK. And now you can see that we still have, here's 1, 2, 3 candles with new highs. 1, 2, 3, 4, 5 candles, 4 candles with a new low. So you can see that those signals, if we zoom back out, are less frequent and more significant. So the longer our sequence count, the more significant those highs and lows are. I'm going to take it one more step to an extreme. Let's go back to patterns, select patterns, go to the gear icon, and we're going to make this a 4 sequence count. That means we've got to have 4 candles up, 4 candles down, or 4 candles down, 4 candles up, plus our middle candle. So that's going to be 8, 9. That's going to be a 9 candle pattern to get us those highs and lows. So if we click on OK and apply and OK, now we get fewer signals, but those signals become more significant. And Vicky asks a great question. Do these line up with MACD crossovers? They might. So, great questions you guys are asking. Phenomenal questions. So how do you choose the optimum sequence count? Optimum sequence count. If you are a shorter term trader, maybe an intraday trader, or you're looking at shorter term trades, meaning trades that last typically from a day to a week, that signal count or that sequence count of 1 may be most effective. If you are an intermediate term trader, trades that last maybe a week to 2 weeks to maybe 3 weeks, a sequence count of 2 may be more appropriate. If you are a longer term investor, a signal count or a sequence count of 4 or even 5 might be more beneficial, because then those indications become more significant in terms of entry and exit tools. All right, so now this is SPX, this is the index. I'm going to we're going to go back to, since I'm typically in this class using shorter term to intermediate term examples, I'm going to change that sequence count back to 2. That means 2 candles up and then a candle and then 2 candles down, or 2 candles down, a candle and then 2 candles up. So I'm going to change this back to a short to intermediate time frame, and I'm going to change my stock to WMT. And the reason that I'm changing this to WMT, this is an uptrending stock. And it's just very recently given me an entry signal based on this indication, based on this level of support and resistance. So Vic asks the question, I'm still failing to understand how these help me to deduce direction. Here's how we do this, okay? If we want to enter a trade in a bullish direction. So first step might be determining what the trend direction might be using a moving average. So my 200 period moving average is still moving higher. So this is a bullish expectation. How do we know where the entry signal is in a particular direction? So many traders, not most, but many traders trade in a bullish direction only. They get into positions, their anticipation is that the price of the stock is going to go up, and they get out when that price starts to come back down. That's kind of a long only perspective. They buy the stock long. So we're going to take that approach. So my entry signal using a Williams fractal indicator is very simply price moving above the most recent high indication. Now, why is that significant? Why is that significant? So if I come back over here and I zoom in on my right-hand side, here is my most recent high. Let me take this line out here because I drew that for something else. But here's my most recent high. It's indicated by that Williams fractal indication. Now, yeah, right now the price of the stock is significantly higher. But why is this high right here important? Because that is my most recent high. And it is also a higher high relative to the high previous to that. So here's a high, here's a higher high. So if I were to draw a line at that high indicated by the Williams fractal, this price move right here of this price bar or candlestick above that level becomes significant because that is empirical evidence of price moving higher. That's called a breakout. And a breakout is an entry signal in this case. So our entry signal into this trade may have been this day right here when it closed above that high indicated by the Williams fractal. That's an entry signal. Now, where might the exit signal be given this tool? So some traders might use this previous low back here. And watch something interesting. If I come down and I draw a horizontal line across that low right there, and I draw it back over here to the left, what do you happen to notice about those recent lows along that level? Many of those recent lows have occurred at or near that level, haven't they? So what does that tell me about that price level in this particular case on this stock? Right around the $99 level, that is a significant level of support. So some traders might use that significant, Kevin, you've got it. Some traders might use that level of support as an indication of where to exit the trade. If price were to break below that level, then exit the trade. Let's look at another example because I've got one. And you could write a script for that JDM for sure. Okay. And Sal asked the question, yeah, isn't this all dependent on that sequence count? For sure it is. So if you want to make a quicker entry, shorten the sequence count. If you want to be more certain, including more data, lengthen the sequence count. Great way to internalize this, and I appreciate you asking that question. So here's how we might go about placing this trade. I might look at entering the trade right now, and I might place a stop loss down here. Now, that's a fair amount of risk. So some traders may not be willing to accept that amount of risk in this particular case. So if we were going to create this trade, right-click, buy custom with stop, and we're going to place our stop down here at 99.77. Now, remember, stops aren't a guarantee. We're going to place this at 99.77. So we've got about $12 of risk in this trade per share. And we're going to go ahead and click on confirm and send, read through this order, make sure that this order is what we want it to do. And we're going to go ahead and we're going to fire that order off. And we're into the trade. And we've got our stop loss in place down here below that level of support. And you could do this for options as well. You could use this as a means to determine your technical analysis for options trades as well. Now, if we were going to look for a trade that hasn't broken out yet, I've got an example of that. We're going to go to this stock right now, CAT. Many of you are familiar with this particular stock. And in fact, it's just now giving us an entry signal based on this characteristic. Wow. Notice what's happened here in Caterpillar. Longer term trend is up. The 200 period moving average is moving higher. I've still got that 2 sequence count Williams fractal. My most recent highs have been lower highs. My most recent lows have been lower lows. Guess what it just did? Price just moved above that most recent high. It has now objectively given me an entry signal. Now, that is not a guarantee that the price is going to continue to move higher. That is not a guarantee that this is going to continue to move in that longer term uptrend because news happens. But this gives me confirmation of a breakout. For some of you who've been in my live events, this is a good indication that that bus is headed north. Doesn't mean that it's going to stay headed north, but it's a good indication that that's the direction that the bus is headed at the moment. So our entry signal is right now on that move above that previous high. And here's our previous low. And if we draw a line across that previous low, we're going to see that it corresponds with a couple of previous lows. That's going to be our support level. So we're going to say, all right, fine. Right click, buy custom with stop. And we're going to make our stop that line right there, 536, where we've drawn that line in here, 536. Let's just make that 536. And we're going to make that good till canceled. There's our entry signal, confirm and send, read through the order. go ahead and click on send, and we'll fire that order off. And that's where we're going to enter the trade. It may fill here in just a moment. So that is the idea behind using the Williams fractals. Now, if this continues to move higher and we get 2 more candles, or we get another candle that moves higher, you know what we're going to have right here? We're going to have a new low. And so if that's our new low, then what we're going to do, now we're in the trade, when we have a new low indicated by the Williams fractal, we're going to move our stop loss up to just below where that Williams fractal is. And we're going to continue to move our stop higher as price continues to move higher. Now, is this a be-all, end-all for entering trades? Absolutely not. Is it a be-all, end-all for exiting trades? No. But can it be used across a variety of different time frames? Can we use this across a weekly chart? Absolutely. There's our weekly low, and here's our weekly high. So if we were using this on a longer-term basis, for those of you that are longer-term investors, a weekly chart might be, as opposed to increasing the cycle count or the sequence count, you might use this weekly high and say, you know what, I'm going to get into this trade if it breaks above that weekly high. That's going to be more information and a longer-term signal, as is the exit signal here. If I'm a shorter-term trader, I might go down to a shorter time frame, 5 days and 5 minutes, and I might use that 5-day, 5-minute chart to make a decision. And in fact, it's just giving me an entry signal on that 5-day, 5-minute chart, and that might be my stop loss below that most recent low. So our rules are these: entry signal into the trade, entry signal into the trade, in this particular case, is a price move above the most recent bearish fractal, or in other words, that most recent high, and an exit signal would be a move below the most recent fractal low. Wow, that's cool. I like that tool because it can be helpful in using what we see, but helping us to visually point out. It's almost like training wheels for highs and lows, but it can be an effective tool as well. Now, here's where you find it. Just to reiterate: patterns, select patterns, candlesticks, then Williams fractal, and it is a script. I don't need to share it because it's already there, but I'm going to. In fact, let's pop that open. Here's the script. And because it's a pre-built, in fact, in this particular case, I can't share that script. But it is pre-built in the Thinkorswim platform for you to use. Now, here's what I want to do. I want to give you some additional resources. We're going to pop right over here to schwab.com/coaching. And this is the location where you're going to find not only our list of webcasts that we have. We teach over 30 hours a week of trading content and investing content, free, live. You can watch the archived versions. You can watch it at your leisure in the recordings. Here's where you're also going to find the registration links for those live events that are coming up. And the other place that I'm going to take you is right here to our Trader Talks webcast page. YouTube.com, search for Trader Talks webcasts. We have one thing that we ask you to do when you come over here, and that is click on subscribe. Give us a follow. That makes it easier for you to find this information. That makes it easier for other people to find this information. This is also where you're going to find the Getting Started with Technical Analysis playlist. But if you search right here, go back to home, and you search right here for support, or you search for highs and lows. Now, here's the Cameron talking about the zigzag high and low. New highs or new lows, buy low, sell high, using the scan tab to locate new highs. So lots of different resources that you can use. These are all free. You can watch these at your leisure. You can go back and stop them and come back to them as you need to. that is your great resource to be able to continue your learning. Guys, thank you so much for being here and joining us. Remember to click on subscribe. Remember to fill out that feedback survey. You can follow me. You can follow Connie on social media. I'm at Ben Watson CS on X. Connie is at Connie Hill CS. You can find all of the other coaches there as well. My thanks to all of you for being here and joining me for this discussion, helping to understand. My hope is you have a better understanding of how you can use some of the tools that are available to point out those highs and lows. Have a great day, everybody. We will see you again very soon. Lots of great webcasts coming up today. We'll see you later. Take care, everybody. Bye-bye.